Stephen Geldart from Zarnico and Robin Shaw from Marex. We're both sugar analysts, and we're very delighted to have been invited to kind of record a debate about the sugar market as we see it at the moment. So many thanks to Tefla. And here we go. I know that Stephen's been thinking about this for some time, and we agreed to look at first the question, how serious do you think the current deficit in sugar is?
It's a good question, Robin. I mean, from my point of view, I think it's pretty serious. It's quite rare that the sugar market goes above 20 cents per pound, or $600 a ton on the world market. It really happens maybe once every decade. So I think the price is telling you it's quite serious, even if on paper all of the analysts' numbers don't look too bad. So, for example, if we look at 2023, we've got around 1 million tons of production deficit. And then that leads into a balanced year in 2024, assuming all goes well with the weather. So the analysts' numbers will tell you not terribly serious, but from my point of view, the price is telling you that it is more serious.
I would say that's backed up by the fact that stocks have been going down quite disastrously. If you just look at India 2.5 years ago had an ending stock of 11.5 million tons. And I think we're going to end up this crop year with an ending stock below 5 million. So we've lost nearly 7 million tons in India alone. And then we've had inverted spreads where the spot has been higher than the forward prices. And that's been encouraging anybody who was sitting on stock they didn't need to get rid of it. And we've been like that for a year. So I would say that stocks are that in a sense we've been living on stock, and we were in a kind of illusion that supply and demand were matched for the last couple of years. I think they were only matched thanks to the fact that we were still that we were destocking, and that in fact production has been considerably below consumption in the last 2 years, and that this is the culmination of a long process rather than just a sudden problem with a little bit of weather, etc. So I completely agree with you. I think we're coming from we've been in this process for some time, and we've come now to what may look like a fairly small deficit in 2023-24, but will be a very significant deficit by the time we get into next year. So I totally back up what you say.
One interesting thing to add on that, Robin, is globally, I think per capita sugar stocks have been falling, and you can, as you say, you can see that in countries like India. But even countries where you do have a good level of stocks, those stocks are often stranded and not really available to the rest of the market. So China is the classic example where the central government holds security stocks, but those stocks aren't available to anybody unless the government decides to release them. And then again, this year in Brazil, we're expecting Brazil to have a very large cane crop and large sugar production, but people are worried about how you get that sugar from up country in Brazil to the port and onto the world market. So again, Brazil might have decent sugar stocks, but if they're not available to the market, they don't really count for anything.
Absolutely. And I would say that Brazil certainly didn't have large stocks. I think that in the month of April, we only shipped 1 million tons out of Brazil because there simply wasn't any sugar left. But just to get on back to the sort of the deeper issue of why we got into this problem, why would you say that production has been so stagnant for so long?
It depends how far you want to go back, Robin. I mean, if you go back to the early 2010s, or even before, and in the early 2000s, Brazil was the big growth area for sugarcane, and then the Brazilian cane industry effectively were unable to expand after the global financial crisis in 2008. They've had their own financial problems. We then saw India really come to the forefront with the new cane variety in the north, and India was then exporting subsidized sugar supply onto the world market, which kept world market prices low. So there's really been no incentive for anybody to invest in sugar production across the last 10 years. And if you look today, India has completely changed its cane sector, diverting a lot of sucrose into ethanol production. So all of that sugar, which had been keeping world market prices relatively low, is now gone. And as you say, we've been running down stocks. We haven't seen a big change in global sugar production, and so we've been one bad crop away from seeing this new sensitivity reflected in the price. And so far this year, you can see we've had slightly below average crops or below expectation crops in India, in Thailand, in Pakistan, in Mexico, in China. So really, I guess it's no surprise based on all of those crop shortfalls that you've seen prices respond in the way they have. And all the time through that period where global production hasn't been growing, global sugar consumption has been growing slowly, but it's been growing nonetheless. So here we are. We're in this particular mess.
Absolutely, and I would just add to that that the ethanol parity, which has been so efficient in balancing supply and demand in Brazil, well, in the world, as a result of Brazil's ability to switch between making more or less sugar or ethanol. I think that parity has had a strange effect. It's meant that we've never accumulated any surplus. Any surplus has automatically meant that the sugar price has fallen below the ethanol parity, and effectively any surplus sucrose has been turned into ethanol and added to the atmosphere. So we haven't had that accumulation of surpluses which used to occur 15 years ago. So we're in a pretty dire situation. The deficit is here. How do you see this going forward? What's the solution?
Well, in the short term, it looks like, I think, as you mentioned earlier, prices really just need people to defer their demand. So we've had strong prices on the world market. The futures curve has been backwardated, where nearby contracts are higher than further away contracts. So the market's working quite hard to get people to defer demand. And then from a longer term point of view, we do need someone somewhere to start making more sugar for its own sake. So rather than planting sugarcane for ethanol, somebody needs to plant sugarcane for sugar. And if you look at somewhere like Brazil, cost of production to make sugar in Brazil is around 16 cents per pound. Local interest rates are close to 14% if you look at the benchmark risk-free rate. So that to me says you need futures prices across the whole futures curve to sustain above 20 cents per pound for long enough for people to have the conviction to invest in the cane sector. So from my point of view, I would say that you need strong prices to sustain for long enough to get people to invest in cane production. How about you, Robin? What do you think for getting us out of this mess?
I don't think the spreads can do any more. I don't think that an inverted spread can do much, because I would say the cupboard is bare. There simply is no stock anywhere that can be quickly brought to the market. We'll talk about China in a minute. So I think it is exactly as you say, a question of price. At what stage does an investor say, "Oh, sugar's up at above 20 cents on the forward months. That looks pretty good. I'll invest," because he knows that everybody else will be saying the same thing. And there is the danger, as we've seen so often in the past, everybody gets the same signal at the same time, everybody invests, and we spend the next 10 years in the doldrums. Do you see that danger again now?
I think it's a risk, but I don't think it's something to consider for 2023 or maybe even for 2024. If you look in somewhere like Brazil, we're just starting to see some of the mills now looking into expanding cane acreage and crystallization capacity. But if you're at the point where a mill is starting to invest in that, you're not going to see those new cane fields being harvested and processed for at least another 12, 18 months. So to my point of view, that is definitely a long-term risk. That would be classic commodity behavior to have a boom followed by a bust, but I don't think it's necessarily a problem for here and now. And even today, if you look at the producers who can respond the fastest to high prices, the beet producers, where you plant beet and then 6 months later you harvest, in Europe, for a lot of farmers, the prices paid for beet have nearly doubled this year. And we haven't really seen much interest yet in expanding beet sugar production. So again, in Europe, if you're going to see that investment in production, that comes through in 2024. So I don't think at the moment, for the short term, we necessarily have a problem with overproduction or overinvestment, not yet.
To get back to what you said about extra crystallization capacity, that means mills buying, installing a bit of extra equipment so that they can swing their production mix more heavily in favor of sugar. On the face of it, that looks a very easy solution, and it could be a very big one, because, of course, at the moment, more than 50% of Brazil's cane goes to make ethanol. So what's to stop that happening pretty quickly and to a fairly large extent, and thus solving the problem that we have of a deficit?
One thing I'm not sure about on this is the ability of local engineering firms to keep up with demand from the mills. It's something that we're investigating. I don't have the answer at the moment, but obviously installing new crystallization capacity, you need support from engineering partners. And these sorts of investments haven't been made in Brazil for nearly 15 years. So we're not convinced at the moment that the new crystallization kit is going to be installed as quickly as some of the mills might hope. And certainly some of the mills that we speak to have been very keen to get towards the front of the queue. I think they are nervous that there may be delays in putting in new crystallization capacity.
But even when you do that, if you increase the ability of Brazil to make sugar, you then face the problem of logistics and actually getting the sugar down from the factory to the port and from the port into the ship. So it's not something that looks as if it's going to happen within the next 2 years. So it does seem to me that this is a problem, this deficit. It's, as you said right at the beginning, it's not a huge deficit this year, but it gets worse next year, and possibly doesn't resolve itself the year after. But I do think that the logical, the quickest and the simplest and the most controllable way to resolve the deficit will be via extra crystallization capacity. Just to look at a few markets in a bit more detail, how do you see India's role in resolving this?
So I think I've also heard rumours that within India the cane area is increasing. Clearly, the expansion of ethanol distilleries means that farmers are eager to plant more cane. But I also then think if you have more cane area available, then the milling sector can expand as well. So the government money going into the cane economy, I think, means that the whole cane sector is growing. Having said that, it's clear a lot of people are nervous about India's next cane crop, and particularly if we get an El Nino weather event, that might mean strange weather. And there are large parts of Indian agriculture dependent on having a good monsoon, reservoirs filling up, and cane developing normally. So for the time being, it feels like most people's number for India sugar production next year is close to what India has achieved this year, in and around 33 million tons. And that might then allow India to export a little bit of sugar, if that comes true. But the problem is that, if you look from 2020 to today, India has exported around 25 million tons of sugar, and the world market has still more than doubled. So is 3 million tons or 4 million tons of sugar supply from India in 2024 going to be enough to help the market? To me, that's not really very clear. I also think that the government is going to be nervous about allowing early sugar exports, given how, as you mentioned, sugar stocks have run down within India. So it might be that if exports are allowed, they come a lot later than everyone's expecting to. So from my point of view, I'm quite nervous about India's prospects for the next 12 months and India's role in containing prices. How about you? Does that match with what you're seeing?
Well, you're frightening me. If you say that India might be able to export a little bit of sugar next year, we actually need more sugar, not less. But I completely agree with you. I can see a situation where India might just be able to afford to allow 2 or 3 million tons of exports, but they'll only do that if they're very assured that the following year will be okay. And the danger of even a slight decline in the quality of the monsoon, which looks probable in the light of El Nino, you'll get less planting for the 2024-25 Indian crop. So for the next 2 years, India looks very much as if they will not be one of the solutions to the problem. What about Thailand?
We're extremely nervous about Thailand. So cane crushing this year wasn't great. I think the government and the mills were hoping for 100 million tons of cane and ended up at 94. And then we think next year they may only crush 74 million tons of cane. So that would be the second worst outcome since 2010. The big problem here is that cassava pays farmers a lot more than sugarcane does, and so farmers are reducing cane acreage and planting cassava. Cassava's used in China as an animal feedstock, animal feed and an ethanol feedstock, and so it's linked with how corn performs. And China used to buy a lot of corn from the United States of America, and now is trying to pivot to Brazil. So the Thai cane farmers, are caught up in a much larger geopolitical and food security situation, and that's supporting cassava. And I'm afraid that means that the outlook for cane in Thailand isn't great. And then if you add on to that the government have changed the way that cane pricing works within Thailand, I just think it's making the farmers very nervous. So from my point of view, we always think of Thailand as being a very large exporter of sugar into East Asia and sometimes into East Africa. But for 2024, we don't see a very good cane crop, and so really that's not helpful when we're looking at ways of solving the shortage of sugar around the world at the moment.
You're making me more and more nervous.
I'm
What
sorry,
about
Robin.
two areas that should be able to at least maintain and possibly solve the supply problem? What about Brazil? Everything's going pretty well there. Most estimates are up in the 37.5, 38 million tons sugar production. A lot of talk about logistics, but it does seem to me that that money talks, and that if we pay enough, we will get shipment out of Brazil. So I can see Brazil as certainly a factor diminishing the short-term problem. Can they expand in the longer, a year from now?
I think they can. It's just the level of investment that the Brazilian cane sector needs, I think, is quite large, not just in new cane fields and not just in new crystallization capacity, but then also in getting that sugar to the port, as we mentioned earlier. Like you, I think for this year, those logistics problems, they will be there. We will get a queue of vessels waiting to load sugar. But like you said, money talks. I think everybody can probably handle the logistics disruption that's coming. My main worry now really is how the weather goes in Brazil through the cane crush. When we last saw an El Nino in Brazil in 2010, the weather was very wet in July, August, September, when Brazilian mills should be at peak cane crush. And I think a lot of people have factored in a very large cane number for Brazil, more than 600 million tons for the coming season. But if it's rainy through the middle of the year, then that number could be a lot smaller than everyone expects. So Brazil clearly is where the growth will be in the future, but in the very short term, there is a lot of weather risk around how well Brazil performs, and I think everyone's going to be watching pretty closely.
What about the one place that could release us a lot of stock? What about China?
I have to say,
Do you
this
see
is a
them releasing any of their
difficult.
state reserves?
This is difficult because when you hold reserves, it's always I always feel like it's the threat of releasing the reserves that's more powerful than the actual release.
Yes, true.
So let's say, for example, that China holds 6 million tons of sugar in stock. If they threaten to release 1 million tons, that's quite a powerful statement to the market. If they do then release and run the stocks lower, then the next threat of release is less powerful. And I also know that before COVID, the Chinese government destocked their corn reserves, and then during the pandemic regretted that they had done so. And I think the feeling with the government was that they would have preferred to have gone through the pandemic with higher corn stocks. So I think the incentive is for the government to not release stocks if they can get away with it. The problem is that sugar prices are very high, import margins are negative, and China has just had a pretty poor cane crop. So the government will want to contain local prices, and it's difficult for them to do that.
Yeah,
How do you see it?
I totally endorse that. I would even add that if you put yourself in the place of the poor people who have to take the decision whether to release any of that stock, we look at it and say, oh, the world price has gone up. That's an excellent opportunity. But they may take the view, should I really release stock in a situation where the world has run out of sugar? And then there is an even more serious point, which is that these people read the newspapers the same way as we do, and would be very reluctant to be the people who took the decision to release food stocks just before, perish the thought, an invasion of Taiwan would mean that China would be cut off from imports from most of the rest of the world. So to me, that looks like a very difficult decision to be taken. I'm conscious of the time. I think we should move on. Just a word on consumption. If we're not going to get a solution via increased supply, and it looks from this conversation as if we're not within the next year and a half, then the only way we can align supply and demand is by some kind of demand destruction. Do you really see that coming?
I think it is starting to happen in some areas. I would say tracking sugar consumption is enormously difficult, and so we normally only find out about demand destruction after the event. But from what we hear in some parts of East Asia, we are seeing some switching from sugar into other sweeteners where possible. We also know that when sugar prices are high, then countries which have a high proportion of tabletop sugar use, consumers tend to be more sensitive to price. So, for example, we saw in Russia last year, in the third quarter of the year, when sugar prices spiked towards $900 per ton, we saw that there was much reduced buying of sugar in the third quarter of the year, and then buying picked up again in the fourth quarter. So clearly, in a lot of places, consumers can be responsive to price. So I think it's possible in the short term we get some demand destruction. But it's difficult. I mean, even if sugar prices are high, consumers don't just look at each food product in isolation. They look across all of their food needs. And if all food prices are going up, then it could be that consumers cut back on other things, not just sugar, or not sugar at all. So from my point of view, I think we are seeing a little bit of demand destruction, but possibly not on the scale that you would need to resolve all of the problems that we're seeing at the moment on supply. So for me, I think still we don't quite have the answer that we need. How about you? What does your analysis say?
That it will happen. It has to happen. Supply and demand have to be aligned, but probably that requires what we would now regard as a crazy price. So I do think we are going to have to see crazy prices. The other problem with demand destruction is it may be happening. Maybe, as you say, it may be happening right now. And all we need to let's say that the problem we're facing is, say, a 5 million ton problem. All you need to resolve that is a 2.5 million ton reduction in world consumption. It's not a big ask. It's actually quite small. So you would have thought that it could easily be achieved. But we won't see it. We won't have proof of it until after the event, as you said. And my last point on consumption is that it's extremely sticky. We've been in what was called the war on sugar for the last 12 years. And it's been fairly intense. You know, you pass a cafe and you used to see red cans of Coca-Cola, now you see black ones. So it has had a lot of news. You would have thought it would have had a large effect, but worldwide, I think you would agree with me that all we've really seen is that world consumption, which used to be going up by about 2% per annum, is now going up by about 1.2, in other words, in line with population. And therefore, the decline in consumption growth has been less than 1%, which I find amazingly little. And therefore, I say to myself, sugar is much more of a habit than it's not really driven by price. Sugar consumption is driven by habit, which inevitably means it's very slow to change. I think that's certainly all we've got time for. Many thanks to you for having thought this out in advance and having contributed so clearly and lucidly. And thanks again to our host, Tefla. I think that's all from us.
Thank you, Robin.
Thank you. It's the record.